got a call this week from a contractor using the Planning for Profit software looking to quote a prevailing wage job. When you get those, many times government jobs, they require you to pay that prevailing wage, a wage much higher than if you're a non-union shop than your guys are actually making. And so that adds a little bit more complexity into the quoting process. And that is the topic of this week's Planning for Profit Minute. Now, to quote a prevailing wage job, you need to have a couple of bits of information. The software still handles it very well, but we need to factor in these couple of extra pieces of information. So the extra elements that you need to have is, what is your average wage for your installers today? Now, that's easy to get. We'll show you how to get there in just a moment. The software does that work for you. The next piece of information that you need to have is, what is that prevailing wage? And again, that's going to be dictated by your state, your job that you're working on today. So you'll have that piece of information. And then the last bit of information that you need is the total of your company matching taxes. So let me show you first where to get this information out of the software itself. So as I switch over and look at my software model, I can, the two pieces that I need to get is, number one, what are my technicians, my installers' average wage? And we can do that by looking at your labor rate analysis report right here under reports. So I'll simply go into reports, and labor rate analysis is the report we're going to look at. Again, that's the breakdown of your hourly rate, what makes up your hourly rate to the penny. Now, simply highlight the department that you're looking at. In my case, it's my installation department. And I can see that we're currently set with the hourly rate that we have up here. We're comfortable there. And I'm just going to scroll all the way to the bottom of this report. And right down in here, the very bottom pane, you can see we actually tell you what is your average field labor rate for this given department. So for my installation department, my average field labor rate, what I'm paying my guys, is $26.07 an hour. That's the average for all of my installers that are allocated to this given department. So that's the first bit of information that we need. We'll just jot that one down, $26.07. Right. The second bit of information that we need to have then is your company matching tax rate. Now, on any screen that you're at in the software, you see your company name and the model that you're working at right here underneath that. All you need to do is click on the model name, in this case, Standard Business Model for 2025. I'm going to click on that, and it will open up the screen that tells you what your company matching taxes are for your model itself. So you'll simply tally these all up. Social Security is 6.2, Medicare is 1.45, my federal unemployment is 0.8, and my state unemployment for my company is 3%. And so I just tally all those up. That comes up to a grand total of 11.45% in company matching taxes. Again, remember that means for every dollar in wage, or every $100 in wages that I'm paying to an employee, I need to kick in another $11.45 on top of that just for the company matching taxes. So once we've got those two bits of information, now we can go back to our calculations that we have. And so again, we now know the average wage. We said it was $26.07. We know the prevailing wage for the job, and then we have our company matching taxes, in my case, of 11.45%. Now, all we're going to do in this case, let's say in our example, our prevailing wage is $65 per hour. Our average wage, we said, was $26.07 per hour, and the job that we're quoting is a 500 man-hour job. Okay? So the first thing we need to do is we need to find out, what is that discrepancy between my average wage and the prevailing wage? And so I'll simply take that prevailing wage of $65 per hour minus the $26.07. I have a discrepancy, or an adder, that I need to give to my guys of $38.93 per hour. Now, remember, you have to pay company matching taxes even for that adder. The software will take care of the company matching taxes for the first $26.07. We need to add in the company matching taxes for the adder, that $38.93. And so if we look at that, I'll take that $38.93 times my company matching tax rate of 11.45%. That means, again, I have to add another $4.58 per hour to that $38.93, that difference, to make sure that when I price out my job, I'm accounting for not only that increased wage, but also the additional company matching taxes that I'm going to have to kick into that. So when I add those together, the difference of $38.93 plus my $4.58 for company matching taxes, the real rate that I need to be looking at is an extra $43.51 per hour. Now, we'll extrapolate that out a little bit farther. We said that this was a 500-hour job, so I'll take my $43.51 adder times my 500 hours on this job. I need to add an extra $21,755 into this job to cover my prevailing wages. Now, how do we do that in the software itself? And so again, we're going to just make note of this, this adder, the 21,755. And I'm going to go back to my software now. And so what I'm going to do is I'm going to go into my job pricing calculator. So we'll go down to jobs on the left-hand side, and we're going to go to the job pricing calculator just below that one. So first, we have to select our department. This was our installation department, so I'm going to go ahead and select that so we pull the right overhead structure. Then I'm going to come in, and I'll just blow this up a little bit so it makes it a little bit easier for you to see, is we're going to look at this job. All right, so this is a, we'll just call it a prevailing wage. That's going to be my job name. Okay. Underneath that, hours to complete, we said it's 500 man hours. Material cost. Again, what are your total material costs on this job? Maybe we've got $150,000 of materials on it. All right. Now, from there, what do we have for subcontractor costs? Now, what we can do on this job is we can very easily, and really one of the easiest ways to do this is to take that adder, that $21,000, and put it in right here as a subcontractor cost. So we're going to put in an extra $21,755. That was the adder, the $21,000 that we had to add in to cover that prevailing wages plus our company matching taxes. Again, we don't have to put a markup right here on the price. For ease, I'm going to set it to 0 for right now. I'm sorry, back up one step. That was my actual materials margin, which was a 30%. And I'm going to put my subcontractor margin, right? So again, subcontractor is the prevailing wage portion. I'm going to put that at a 0%. So we just add in those dollars into the software itself. So once we've got those in, I can now hit calculate. The software will now crunch through the numbers. And from here, we take it just like we always did. All right, so let's say I'm going to come in here, and again, I'll just blow this up a little bit. My standard install rate that I use today is $48 an hour. That's the one that's in bold right here. That would mean I price this job out at $260,000. If I do that, it would generate $54,000 in net profit, which is a 20.98% net profit. Now, you and I both know on a job like this, you're not going to make almost 21% net profit, right? So maybe my target on this one is if I can hit a 5% net profit, I'm happy. Okay. Again, we'll just simply start scrolling down, right? And again, I can't get as low as 5%. 17.82 is as low as I get, and then I get my break even on this job of 475. So I'm simply going to come back up and I'm going to alter my material markup because, again, we don't need that much material markup in here. With $150,000 of materials, I add 30% to that. It's putting a lot of profit in this job. And so maybe I take and drop that down to 15% markup. Again, go ahead and hit calculate. And I'm simply starting to look for, you go back to this net profit column, and I'm shooting for a 5%. The 4.97 right there, right? 5.41, right in between those two numbers. That would mean that I would basically take and quote this job out here at $217,000. At $217,000, that will generate $11,750 in net profit after we paid all expenses. People are all paid, equipment's paid, you're paid, put money aside for trucks. There's an additional $11,000 left over. That is my 5.41% net profit, including those prevailing wages and company matching taxes. And remember, in the job pricing calculator, once you price out that job, we can again just simply click on the quoted at button, right? So we said it was 5.41% right there. I can click on that button, and now at any point, I can simply hit Save in the bottom right-hand corner. It will now save that job to the database so we can come back later and do some job costing on that particular job. If you have any questions on this process, feel free to reach out to us, but it will account for prevailing wages on a job itself. And that is this week's Planning for Profit Minute.